Good morning, good day, wherever you are. Welcome to the Forex Fundamental Analysis for June 13th. It's brought to you by OctaFX, the broker with one of the lowest spreads in the industry and a broker that has won several awards. Let's begin. Just a few disclaimers. First, a risk disclaimer. Trading foreign exchange on margins carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. Okay, some quick words about myself. My name is Johay Elam. I'm a Forex analyst. I used to be a retail trader. I used to be a computer programmer, and I founded Forex Crunch back in 2008. The website focuses on fundamental analysis, and that's exactly what we'll do here as well. Okay, so let's begin. On the agenda today we have the big stories moving markets. The next big event will focus, of course, on the decision by the US Federal Reserve, which should move the dollar and other currencies quite a lot. Key levels of support and resistance using the OctaFX MT4 platform. And we'll do it for all major currencies. These will be, for the US dollar, we'll discuss dollar yen. Then we'll move to the world's most popular currency pair, euro dollar. Move to pound dollar, which moved quite a bit on the UK elections. Australian dollar. And a surprising move also by the Canadian dollar last night. So, top stories. James Comey, the former director of the FBI, big political story last week. He was very critical of Trump. He said that the president basically put out lies over there, but he did not say nothing we did not know, and most importantly, he didn't use the words obstruction of justice. So basically it's an ongoing political story, but it did not have any market movements. We did see dollar yen moving a bit higher when we learned that Comey did not intend to say anything new. That came one day before the testimony itself. Today, later today, the Attorney General, Jeff Sessions, will also testify. Interesting politically, probably not the market mover. Just watch out for anything related to that. Most probably nothing should happen there. Trump's net approval rating is now at -18. This means that markets expect less of tax reforms, less of fiscal stimulus, and basically the dollar should not rise too much on politics. Remember, the dollar rallied back in from November, on hopes that Trump would boost economic growth, push inflation higher, and then interest rates would rise at a quicker pace. We have on the back burner the crisis in the Persian Gulf in Qatar. Hopefully there will be some kind of a resolution over there. So far we've seen oil prices a bit lower, but I cannot say it's fully related to this crisis. Okay, in terms of data that moves dollar yen, we had jobless claims last week at 245. Very stable. The US jobs market continues looking quite good. On the other hand, the growth estimate by the Atlanta Fed fell to 3% for Q2. This is a relatively high growth rate after a very poor 1.2, but this 3% is a downgrade from above 4% initially. It was gradually downgraded. The Fed hike, we're going to talk about that more in detail. It's being questioned by many, including myself, including some banks, which don't understand why the Fed is in a rush to raise interest rates when the economy is not growing really fast, when inflation is low, and things like that. But markets are pricing a 95% chance for rate hike tomorrow, Wednesday. That's because the Fed gave us the full hints that this is what will happen. Okay, but this will probably be a dovish hike. And let's talk a bit more in detail about the next events and then focus on the Fed. Today we have producer price index. Should move the dollar just a bit. Tomorrow we have key events, retail sales and inflation figures, but they come on the same day of the Federal Reserve. So I believe that they will have a limited effect. So in the the dollar will probably move just a bit for a limited time, and then we'll have to continue with the tension with waiting for the Fed. The Fed makes its decision at 6 GMT, Wednesday, tomorrow, and Yellen's press conference is half an hour later. On Thursday, we have as usual jobless claims, and on Friday, some housing data, and also consumer confidence. But on Thursday and on Friday, we will probably see more reactions to the Fed. So the Fed makes events before the publication less interesting, and also those afterwards. So as you can see, the main message is the Fed decision. So it's Wednesday at 6 GMT. The first and foremost, the initial reaction for the US dollar: did the Fed really raise rates? There is a very, very, very small chance, maybe 5%, that the Fed will not raise rates. If the Fed does not raise rates, the dollar crashes, end of story. Very unlikely, totally not priced in, but if they keep the rates unchanged, you'll see the dollar falling and falling and falling, regardless of what they say next. The second thing to watch out for, we assume the Fed will raise rates because they told us, is the dot plot. That's a document that details what the Fed intends to do in the future, how different Fed members see interest rates developing this year, next year, and in the following years. So what could be a dovish hike? What could constitute a dovish hike if the Fed raises rates now, but because things are not going so well in the economy, they could lower the path for the next rate hike. So we'll have only 2 rate hikes this year. We had one in March, one now, and then no more until the end of the year. In this case, the US dollar could fall, okay? Because a rate hike is priced in, but markets still price in another rate hike for the rest of the year. An upgrade, of course, if we have 4 hikes this year, according to the Fed, it's good news for the US dollar. If it's a downgrade, as I mentioned, only 2 hikes, we already have dollar will fall. And if there's no change, still expecting a 3rd hike this year, probably in December, probably we'll see the dollar moving up and down without a clear direction. Third, for the Federal Reserve, in terms of what moves the US dollar, what is the tone of the statement? We know that inflation is falling. We know that employment still looks good. But wages are also falling. If they're worried about inflation for a change, they don't say it's only transitory, then the US dollar could fall. If they're worried about wages, and we've seen wages stuck at 2.5%, again the dollar could fall. If they dismiss everything, if they say everything is okay, everything is only temporary, then the US dollar could rise. That's what they said last time about growth, that weak growth in the first quarter was transitory. Transitory means it is not important at all. Okay, if we have a dovish descent, that means that we have 10 voting members, including Fed Chair Janet Yellen, and probably 1 will vote against the rate hike. His name is Neil Kashkari of the Minnesota Fed. That could be a bit negative for the US dollar, but again, the most important things are, first of all, the Fed raises rates. Second, the path of rate hikes later this year. Third, what is the tone? Are they more hawkish, more dovish, more optimistic about the economy, or more pessimistic? Then we have the press conference by Janet Yellen. I must say, you don't need to watch all of it. It's usually very boring because she wants it to be boring. She doesn't want to rock markets too much. The Fed does not like too much volatility. In any case, it begins at 6:30 GMT. If she's more optimistic, of course, the US dollar goes up. If she's more pessimistic, the US dollar goes down. And another topic that will probably be on the agenda for Janet Yellen, the chair of the Federal Reserve, is the balance sheet. Okay, the Federal Reserve currently has a balance sheet of 4.5 trillion US dollars. That's a lot of money. That's all this quantitative easing or printing money. And it has been stable for the past 2.5 years. Maybe this is the time to begin at least talking about reducing it. And if the Fed does what was called quantitative tightening, or QT, the opposite from quantitative easing, QE, then we have less dollars in circulation, less money floating, and the US dollar can rise. But the Fed will probably go as gradual as possible, as slowly as possible, doing it very, very stable, not to shock markets. But this is a topic that will rise in the press conference. Okay? So I don't expect any movements from that. The markets are still focused much more on the interest rates. When is the next interest rate? That's the big speculation, and that will move the dollar up or down. Okay, remember that the Fed decision happens at 6 with the dot plot, the statement, the new forecasts also for growth and inflation. The press conference is at 6:30, but we'll have another round of reaction, another impact on the US dollar at around midnight GMT at the Tokyo Open, and the full reaction at the European Open at 7 GMT on Thursday. Okay, and we'll be here on Thursday to discuss the reaction, to analyze it in full. In general, for dollar yen, it is most sensitive to US indicators. We've seen, for instance, last week that we had Japanese GDP. It was downgraded. It hardly moved the pair, didn't move it at all. It rises with chances for rate hike, so that's the biggest mover of the US dollar at the moment, of dollar yen. It falls when Trump is in trouble, when we realized last week that Trump is not in such a big trouble, or at least not in a new kind of trouble. Dollar yen recovered. And it falls on geopolitical worries, and we can mention the Qatar crisis at the moment, still a bit more in the background. North Korea, nothing currently. Markets are currently focused on the rate decision. So let's look at the chart. This is the MT4 platform of OctaFX. So let's move to the dollar yen chart here. We're currently just hugging the 110 level, so currently just around this pivotal line within the range of 110.20. If we look at lines from top to bottom, we have 114.30, which was the top of the cycle. Much below this line, we have 112.10, which was a swing high 2 months ago. Then we have 110.80, another high seen quite recently, a few days ago. 110.20, I would say it's a line within the current range, a pivotal line. Under that, we have 109.50, and the line in the sand, the cycle low for dollar yen is 108.10. So if Trump is in big trouble, watch out for 108.10. If the Fed remains very, very optimistic, the top line is 114.30. Okay, let's go back to the presentation and talk about euro. And we have to talk about the ECB. It was a big event last Thursday. They began with moving the reference to lower rates, and this is a hawkish move. Okay, they don't intend to lower rates. They didn't move them for a long time, but also they told us that they're less pessimistic, more optimistic. In addition, risks are now balanced. That was fully priced in, fully expected. They told us beforehand that risks were tilted to the downside. Now they're more optimistic, it's more balanced. That was the good news for the euro, that was priced in already. Didn't push the euro much higher. The big news came from a downgrade of inflation forecasts, and the ECB downgraded them more than expected. Okay, so this hurt the euro. And then another blow for the euro came from ECB President Mario Draghi, who said that basically nothing has changed on core inflation. So this is what triggered a negative reaction. However, all in all, things were relatively balanced. So we had a euro retreating from the highs. It's still lower than before the ECB decision, but we haven't seen it falling like we'll see the pound later on. So we had it relatively balanced over there. Okay. Other euro events, on the political front, French President Emmanuel Macron, he won the parliamentary elections. The first round, there's another round next Sunday, but all in all was as expected, on course to a huge majority in parliament, and that's good for reforms. Another small positive development in Italy, the populistic five-star movement suffered a setback in local elections. And in Germany, current Chancellor Angela Merkel leads the polls by 14%. Her opponent is also pro-European, but in any case, markets prefer Chancellor Merkel, continuity, and ECB's Currencies progress on inflation. So it's another sort of optimistic thing for the euro. All in all, euro-dollar remains quite balanced. The next big euro moves we have today, the ZEW economic sentiment from Germany. It's rising gradually, should continue rising a bit more. On Thursday, we have Eurogroup meetings. Going to talk about Greece, but probably not going to make any decisions because of elections in Germany in 3 months. Probably going to delay the decision for another opportunity. Just keep your eyes open for that. It's probably not going to be a big event. On Friday, we have final inflation numbers. These usually don't change too much. We had a setback on core inflation. Let's see if core inflation moves from 0.9%. I would ignore the headline number. In general, euro-dollar is still trending up, even though it's stuck in the past few days. French elections of the presidency in April unleashed the upside. Growth is stronger in the eurozone. It was even upgraded to 0.6 recently. Politics look more stable, as we mentioned. And the next big event, of course, is the Fed for euro-dollar. Okay, the ECB is behind us. All in all, the pair maintains the uptrend since the beginning of the year. Let's look at the chart of euro-dollar again on the MT4 platform here. So we're currently in some kind of range trading, but in a higher range that we've seen beforehand. So the lines to watch in the very, very top, if we have a break to the upside, we have 114.20, then 113.60, then 113, which was, we got very close to that, then 112.80, which is the cycle high. To the downside, we have 111.60, you can see that line as support on the chart, then 110.75, then 125. The round number of 110 is very round. People are going to talk about it, but it's not technical line of support. It didn't work, not as support, not as resistance. Under that, we have 109.60 and the post-French elections low of 108.20. Okay, here are the big lines to watch on euro-dollar. Let's move to the pound. This was out of last Thursday's big events. This was the biggest market mover. So the result was not as expected. It was one of the scenarios we talked about, but not the most likely one. So the Conservative Party, led by Prime Minister Theresa May, did not win a majority. Okay, we had an immediate reaction on the exit polls, a fall of around 250 pips. Then on Friday, after the results were clear, we learned that Prime Minister made a deal with a Northern Irish party called DUP. I must say I didn't know much about them before the elections, but it's a very unstable coalition. Everyone is asking for how long will Theresa May stay in power, or will we have new elections? A lot of political uncertainty, so we had the pound falling even further yesterday, another 100 pips or so. Okay, so we have ongoing pressure on the pound. The last political updates were also not that positive. So the Brexit minister, Davis, he wants a hard Brexit. But the Scottish Tories, the members of the Conservative Party from Scotland, and in Scotland the Conservative Party did have significant gains, they want a softer Brexit. So each one is pulling to a different direction. There's a lot of criticism about the deal with the DUP, this coalition. The DUP is a very right-wing party, much to the right of the Conservatives, and they hold the balance of power. They can extract concessions from the government. Anyway, there's a lot of, as I mentioned, political uncertainty. Everything could be delayed. What's called the Queen's Speech, or the vote of confidence for the government, it's planned for next Monday, June 19th. It could be delayed. That's also the day when Brexit negotiations are expected to begin, but we probably won't have Brexit negotiations without a functioning government. So watch out for political developments. They move the pound still more than anything else, despite quite interesting figures that we'll have later on today. Rating agencies already warned Britain that the political uncertainty could lead to a potential downgrade in the credit rating. New elections, of course, could delay everything. Brexit, first and foremost, what markets care about. Corbyn, the leader of the Labour opposition party, is now even more popular than before the elections. He was not popular at all 2 months ago. He could provide a soft Brexit. So even though he's very left-wing and markets don't like that, if he goes for a softer Brexit, that could be pound positive. Next big events, we do have important economic data. We have inflation report today. Inflation is expected to continue rising, 2.7% year over year. Wednesday, tomorrow, we have the jobs report. Watch out for wages. Wages are currently lower than inflation. That means that standards of living are falling. That is an issue. On Thursday, we have retail sales. Also, watch out for what people are buying. If they're buying more food or buying less in general, it's bad for the pound. If they're buying other stuff, it's good. And the big event for the pound, usually a big event, but again, we have politics all around. The decision of the Bank of England. No change is expected. Mark Carney and his colleagues do not have a press conference this time, are not expected to change interest rates. A lot of uncertainty. And one thing to watch out for is if one member of the Bank of England who voted last time for a rate hike, Christine Forbes, if she will change her mind and will not vote for a rate hike. But again, political developments, given the results of the elections, will have a bigger impact. Yeah, so did Forbes change her mind? That could have an impact if she votes with the majority for leaving rates unchanged. That's dovish for the pound. If she continues voting the same, probably no change for the pound. In general, we're back now to the lower range. We had a move to the higher range, the post-Brexit range. We're back to the low range of 120 to 128. Politics is back, internal and external, so it's Brexit and all the dealings within the government, opposition, all these things. Bias changed to bearish, okay? Also in the economy, the UK economy slowed down to only 0.2%, and Brexit, of course, matters more for markets, more for the pound, and things are looking more complicated with the political uncertainty. Let's look at the charts. Let's see the big fall in the pound. So here we are on the MT4 platform. You can see quite a fall here in the pair. Okay, we were on, here is the move to the upside on the announcement of the UK elections. And now we're back to still above the levels seen before the announcement, but quite a big fall from the highs. So if we cover all the important levels from top to bottom on pound dollar, if we have some very positive development regarding Brexit, 130.50 is the top line. Then we have 129.25 was a limit there in the range. 128.40, also a pivotal line within the range. 127.75, one of the post-election highs. 127, within the current range, it's an important line. To the downside, we haven't reached it yet, but it's 126.15, used to be an important line in the past. 125, a round number, it also worked as support, and 123.50 if things really get complicated. Okay, let's move quickly to commodity currencies. In Australia, China's inflation was mostly in line. Business confidence in Australia was as expected, nothing that moved the Aussie dollar. The oil slump, the falling oil prices did not affect metal prices of iron and copper, so the Australian dollar remains very stable. Next big Australian events, we have Chinese industrial output tomorrow, and more importantly, we have the Australian jobs report. So we're expecting from the jobs report, expectations are quite low, a gain of less than 10,000 jobs. Last time it was 37,000. And when we have low expectations, there's more room for an upside surprise. So I believe the jobs report could be positive for the Australian dollar. All in all, Aussie remains relatively stable after the recent bounce, and it's enjoying good data from Australia and ignoring China. And China is also, well, the recent data from China is not that bad. It was quite negative 2-3 weeks ago. Okay, and moves, I always mention it, are more subdued than in the past. Volatility is relatively low. Okay, let's look quickly at the Aussie dollar chart. So we have here a double top. As you can see, we bounce from the lows. It's already an established bounce. The levels from top to bottom, 77.40 is a key line of resistance if we really move to the upside. It's followed by 77 and 76.10, which worked both as support and as resistance, okay? A very important level. 75.60 is this double top, okay? Then we have 75.15, so that's really the current range at the 75 handle. 74.10 is aligned to the downside, followed by 73.75, and 73.25 is one of the more recent lows. Okay, Canadian dollar had a huge move to the upside. That means the move to the downside on the loonie. We'll finish with that. First of all, on Friday we had the super jobs report. 54,500 jobs were gained in Canada, much more than expected. The economy is booming, and we had a response from that from the central bank. So Caroline Wilkins yesterday, the deputy governor, she said that they will reassess stimulus. She was very optimistic about the economy. They might move from a neutral stance, from not changing rates, to perhaps considering raising rates. So the Canadian dollar shot higher. In addition, house prices, which I expressed worries about previously, at least the prices of new homes are on the rise. So everything looks positive for Canadian dollar. Oil prices did fall, but the most important event is the surprising speech by Wilkins that said that they might move to a more positive stance. The next big events on Wednesday, as every Wednesday, 2:30 GMT, oil inventories, manufacturing sales on Thursday, and probably the most important Canadian release is on Friday with retail sales, what consumers are doing. Okay, in general, dollar CAD had another weak start to the year, or to be more precise, the Canadian dollar. But the OPEC decision to cut production, to extend the cutting production, and the Bank of Canada, they pushed the Canadian dollar higher. Still looking for direction, but we're very far now from the highs. Okay, let's look at the chart, see the big fall we've seen yesterday in dollar CAD. That means a stronger Canadian dollar. So yeah, you can see this. We topped out here at 137.19. Further resistance now, 136.40 used to be support. 135.40 is the top of the previous range. 133.80, we had support over there, but the crash yesterday sent us to much lower ground, and the fall continues, extends to the downside. 132.60, we're almost there. It's the most recent line of support, closely followed by 132.30, 132.20, and the lowest line to the downside is the round number of 130. In this case, it does work as strong support. Okay, so that's it for the Canadian dollar, and that's it for today. So thank you very much for coming. Trade with a lot of care. The Fed event, we had big events last week, and the next big thing is the Fed will be here on Thursday to digest everything Fed related, and of course all the other important currency pairs. As always, comments and feedback are most welcome. So that's it for today. Thank you, and bye bye.